Hello, and welcome to this video on break-even analysis and marginal costing statements. This question is taken from the June 2021 paper 2, and it's question number 15. There are two parts to it, 15.1 and 15.2. So let's see what the information we're given. UJW Electrical Limited produces washing machines. It has a new washing machine it wants to launch from the 1st of August 2021, which will produce in a new factory. The following options A and B are being considered. So you've got two factories, Factory A and Factory B. Now, the annual capacity for Factory A is 1,450 units, whereas for Factory B, it's 2,000 units. The annual factory rent for Factory A is £38,000, and Factory B, it's £42,000. The annual factory manager's salary in both Factory A and Factory B is going to be the same, it's £27,295. Now, the number of factory staff in Factory A is 4 staff, and in Factory B, it's 5 staff. Now, the selling price of the washing machines produced in Factory A will be £550 each. Now, due to economies of scale, the selling price of the washing machines produced in Factory B will be 10% lower than Factory A. The royalties, they must be paid to the designer of the washing machine at a rate of £15.40 per machine. Factory staff are paid at a monthly salary of £1,475, and each completed washing machine incurs an additional labour cost of £20. Now, finally, we're given the materials of a higher quality are needed for the new product, and they're likely to cost 40% more per washing machine. Now, the current costs are £177.40 per washing machine. So, 15.1 then. Calculate the break-even point in units if 1,450 units are produced and sold using Factory A. So the first thing I'm going to put down is my little formula for break-even point. The break-even point are your fixed costs divided by your contribution per unit. Now, your contribution per unit is the selling price per unit, take away the variable cost per unit. So what we need to know then is the fixed costs and the contribution per unit. Now, the fixed costs are a combination of various costs. So we're going through some workings now, my fixed costs. The fixed costs of Factory A are the factory rent, the factory manager's salary, and the factory staff salary, because neither of these amounts change depending on the level of output, so they're all fixed. So the factory rent for Factory A, we'll go back to the table at the top, is £38,000. So we have £38,000. The factory manager's salary is going to be in Factory A. Now, this one's the same in both factories. It's £27,295. So £27,295. Now, the factory staff salaries, I've got a little calculation here. Now, the 4 rates of the number of staff. The 1,475 is the amount per month. There are 12 months in a year, so I times by 12. So just check that back again in Factory A. So Factory A, we've got 4 staff there for Factory A. Monthly salary is 1,475. So for the year, you then times that by 12. So the factory staff salary is going to be 4 times 1,475 times 12. That's going to give us 70,800. So I want the fixed cost now. I've just combined those 3 together. So factory rent is 38,000 plus the factory manager salary of 27,295 plus the factory staff salary of 70,800 gives us a total of £136,095. So I go back to our little calculations at the top. My fixed cost now, I can put in the figure we just calculated for fixed costs, £136,095. So now what we want is the contribution per unit, and that is your selling price per unit, take away your variable cost per unit. So the selling price in Factory A, we go back to the initial information. Factory A, the selling price was, as in the first point here, £750. The variable cost, the cost that changed with the level of output. The royalties. The royalties, if I go back again, we were told the figure for royalties. Second point down is going to be £15.40 per machine. So royalties, I'm going to have £15.40. The additional labour I've got now, so I go back to the information in the question. We were told each completed washing machine incurs an additional labour cost of £20. So again, that's another variable cost. So that's going to be £20. And direct materials, they originally were £177.40 per machine. Now they're going to increase by 40%. So to find the increased amount, it's going to be 177.40 times 1.4. So 177.4 times 1.4, that's going to give us £248.36. So I now need a total variable cost now. So I'm going to add together. The royalties are £15.40, additional labour of £20, and direct materials of £248.36p. That will give me £293.76. So for contribution, it's the selling price take away variable costs. So that's going to be £750 take away £283.76. That's going to give us £466.24p. So again, I'll go back to the question now. The contribution per unit then, underneath the fixed cost, is going to be £466.24. Now we do the division now. So I've got 136,095 divided by 466.24, and we get 291.899 units. In other words, 291.899 wash machines. Now we can't actually produce and sell 0.899 of a wash machine. So the break-even is going to be either 291 or 292. If we produce and sell 291 wash machines, we'll be 0.899 wash machines less than the break-even point. So we therefore must round up to the next whole number. So the break-even point is going to be 292 units. That's your 15.1. Now 15.2 is a little bit different. Prepare a marginal costing statement to show revenue, contribution, and profit if 2,000 units are produced and sold using factory B. So when it specifies the words revenue, contribution, and profit, we must have them in our answer. So I've got a marginal costing statement below now, and this is how it works. So factory B, marginal cost statement, you've got revenue, got variable costs, you deduct them from the revenue, you get contribution. To get the profit, you take away the fixed costs, and then we end up with the final figure at the end for profit for the year. So let's see what we've got for factory B now. Now factory B, we go back to the top. This time we've got 2,000 units. The washing machine is going to be sold 10% lower than factory A, and factory A is £750. So the calculation for that then, I put in brackets to save a bit of time for us, is 2,000 units times 750 times 0.9. So that's going to give me 2,000 times 750 times 0.9, and we're going to have £1,350,000. That's going to be our revenue from these 2,000 washing machines. Direct materials, again, it's 2,000 units. Price of materials was $177.40 for the previous machines, and for the new machines, it's going to increase by 40%. It's going to be times 1.4. It's going to have 2,000 times 177.4 times 1.4 is going to give us £496,720. So that's your direct materials for the 2,000 wash machines. Additional labour, again, it's 2,000 units. As we saw before, it's £20 per unit. So you can have 2,000 times £20. It's going to give us £40,000. The royalties, again, we've got 2,000 units, and it's £15.40 per washing machine. So you have a positive 2,000 times 15.4. The royalties are 30,800. So for the total variable costing in factory B, I'm going to combine together the direct materials of 496,720, plus the additional labour of 40,000, plus the royalties of 30,800. That's giving me total variable cost of 567,520. Now they specifically highlight the word contribution. So you get the contribution, it's your revenue of 1,350,000, take away your variable cost total of £567,520. So a contribution is going to be £782,480. Now to get a profit, we take away the fixed costs. So now you want the fixed costs for factory B. So rent for factory B, we go back to the question. The rent for factory B was £42,000. The manager's salary, it didn't change, but let's just check in the question. The manager's salary was £27,000 £295. Now, the factory staff salaries is a tiny bit different. So let's go back again. In factory B, we got 5 staff this time. So it'll be 5 times 1475, then times 12. So it's 5 staff times the monthly amount of 1475, then for a year, you times that by 12, and we get £88,500. So now we need to work at the total of our fixed costs. So that's going to be a combination of the rent of £42,000, plus the manager's salary of £27,095, plus the factory staff salaries of £88,500. That's going to give you a total of £157,795. So finally, they want the profit for the year. So the profit for the year is your contribution of £782,480. Take away your fixed cost of £157,795, gives us a profit for the year of £624,685. That's question 15 from June 2021, paper 2. Hope you enjoyed the video and found it useful. Take care then. I'll speak to you next time. Bye-bye.